Good afternoon. This is Mr. Not Advice. As always, this is for entertainment and education purposes only. It is Thursday, July 16th, 2026. This is my end of the day update. Well, we had a very tough day in the market as chips and AI and that whole sector continued to sell off, despite the fact that there were good earnings coming out of Taiwan Semiconductor as well as ASML. I think part of what's going on is more mechanical and has less to do with the macro or the fundamentals of the companies. I think that's across the board. High beta names were slammed today again. Additionally, Korea continues to reinforce the ongoing rotation out of semis into mega caps. And as I mentioned, momentum stocks continue to get pounded. Again, I think what's going on is less a function of earnings or of the fundamental picture of these companies and more of mechanical selling due to specific levels being hit as well as just over positioning. So I think that's what's dictating the price action. We did have a lot of macro news this week, with today perhaps the most mixed of it. Jobless claims came in lower than expected. Retail sales came in pretty much in line. Housing was weak, and the Philly Fed survey was perhaps the most notable release, surging to 41.4, which is the highest reading since late 2021. And that was versus an expected 12.5. However, you always need to take the Philly numbers with a huge grain of salt. But still, a rise of that amount is pretty serious in terms of talking about economic expansion. Morgan Stanley Wealth Management, despite challenges, consumers are still spending, and the labor market shows no signs of cracking. I would agree with that. Although I continue to remain befuddled where the heck consumers are getting their money to continue this spend. But anyway, rate hikes continue for July to be put off the table with, as I mentioned yesterday, September being now a coin flip. U.S. futures initially drifted higher overnight, despite a mixed session in Asia, where Korea and Japan were dragged down by continued AI hardware weakness. Korea is also, due to new legislation, as well as tripling the margin requirement, as well as an interest rate hike, is putting pressure on levered ETFs. So the U.S. equity open sparked a brief bid, but then sellers came in, which left the Nasdaq as the day's biggest loser again. There was a little bit of modest buying right here at the close, but that was only to lift the stocks right off the lows. Activity level again was very muted, with Goldman's trading desk saying it was a 3 out of 10 in terms of activity level. Long only funds were 7% better for sale, with selling in consumer staples, infotech, and macro versus some small buying in materials and financials. Hedge funds were skewed 8% better to buy today, with demand in infotech and industrials versus selling in communication services and macro products. Again, we've got both of those parties selling to one another in some cases. Zero DTE traders were just not involved today. Probably that has to do with more, I think, of option expiration. But what we did see was broad index selling that was pretty much from the open after the initial attempt at a move up. The NASDAQ did close well below its 50-day moving average today. It's going to need to reclaim that at the very least before some of the mechanical selling, I think, ends. Taking a look at the semiconductor index today. Interesting, it was the weakness in semis was on the back of really two big earnings beats, both out of ASML's quarter two beat and raise, as well as Taiwan Semiconductor. Right now, the semiconductor basket is actually in a bear market right now. But according to, I got to see who this is from, but commentary is the action in chip stocks going forward is still the most important issue for the market. They are definitely showing meaningful cracks, so they're going to have to see a strong rebound and sustainable rebound soon, or it's going to raise additional warning flags. As I said, semis down 22% from their highs in mid June. The Mag 7 stocks benefited for the second day in a row. Although they were flat, the S&P 493 was down 1.6%. Yesterday, the Mag 7 was again a safe haven. Goldman Sachs noted that the entire landscape was under pressure today, with optical networking, AI semis, data centers all down 5 to 12% in the last 2 days. Bonds and stocks have been volatile this week, but crude prices have flatlined for the last 3 days, despite the uptick in bombings and attacks, both sides, U.S. and Iran, although Trump continues to say that Iran keeps calling up on the phone and wants to make a deal. Speaking about oil, this is coming out of CIBC private markets. Absent a meaningful escalation, traders are reluctant to push prices materially higher because the physical market isn't yet signaling a critical supply shortage. So, one good note that President Trump said he appreciated the release of an American detainee. She had, I don't know how long she had been a prisoner there, and said it was a rare gesture of goodwill from Iran. But obviously, that did not stop the bombing, of course. Looking at gold back below the 4,000 level today. And in addition to that, we had Bitcoin was got rejected here at 65.5. Finally, Bloomberg's Michael Ball is actually optimistic when it comes to AI and the microchip market. If you look at this chart, the dark line is the weighted average net earnings versus the blue, the weighted average market cap. So if the market cap is lower, that means stock prices are lower and you're paying less for the net earnings estimates. So while net earnings estimates went up, these stock prices have gone down. This is, in my mind, a buying opportunity because I don't think now that next week are AI and hyperscalers. So we're going to get a very good read on if the current stock prices are foreshadowing a slowdown either in their capex spending or, more importantly, their availability to debt markets, or if this is something that's going to be just more temporary. Of note, yesterday, Oracle did go into the debt markets with a second lien position bond offering. They were trying to raise $1 billion, and about an hour before it was going to close, they had 650 million raised and finally raised just over 800 million. So it wasn't sold out. Is that a big deal? I don't know if that's Oracle on its own or if that's also something that's going to be more endemic or more problematic for the overall debt markets. At some point, the hyperscalers, I think, are going to get hit very hard. I think they're going to get harder than they are now. Why? As I've said before, you've got Chinese frontier models that I just looked at a report that they're charging not 1/10, but in some cases, 1/100th of the cost per million tokens that the hyperscalers in the US are charging. The hyperscalers have built their business model that there's going to continue to be used by corporations, but yet we also saw that corporations, 30% of them, are using Chinese models. Additionally, the token spend is being driven down by constraints by individual companies, and the token rates are coming down also. This is the commoditization of LLM models and the AI business, just like you had commoditization of servers and network equipment in 99 and 2000. It's just happening with a great deal of speed. So for the time being, I'm waiting for next week, which we get hyperscaler and neocloud earnings, which could be a calming force. The bottom line is the build out is becoming more expensive, and that makes future AI earnings less about proving demand is real and more about proving the spend is growing, not slowing. Think about that statement. So they have to come out next week and say, yes, they still have access to the capital markets and they're being well funded to continue to spend money. Looking at the overall market today, it was a pretty bloody day. You know, we were in IVZ, we got in on a 5 minute chart. We were up at one point during the day for a very large part of the day right here. We got in off of this break here. We were up at one point almost 9%, and then it just succumbed to selling. I think we ended down flat on the stock today, but I think maybe we ended down 1%. I'll need this to get back up. I've got to look at the daily chart above level. Otherwise, I'll close it for a very small loss. As it relates to EOSE, what I wrote in the room was this in my Discord room. I don't believe anything will happen with the price of EOSE, either price wise or trend wise, until the rights offering is complete. It's very difficult for the underlying to move when there's so much arbitrage monkey business going on. These past 2 weeks, however, in my opinion, have been nothing short of exciting with all the opportunities that are starting to be capitalized on. If that trend continues and grows, the stock price will follow. However, right now, the stock price is almost totally backward looking, as I've mentioned before. While it's not as bad as a month ago, the overall investment community is still, I think, feeling the sting of the lack of transparency and the mistakes that Joe made at the end of 2025, beginning of 2026. And it's going to take time to turn that huge ship of perception and opinion. And ultimately, investors right now are gun shy, as they should be. But the last 2 to 3 weeks have been fantastic. And I hope and I believe they are harbingers of what is to come. EOSC moves very fast in both directions. It just needs to justify as a company why investors should switch their view from backward looking to forward looking. Okay. And that's where we'll start to see a premium in the stock price to the top side. We're not there yet. I don't take today's selling. It was very large volume in the common, but it doesn't concern me. I want to see how the stock reacts after the rights offering is done. I still am bullish this stock, and I don't get caught up into the day-to-day machinations of the price action. I think that we will see much higher prices by the end of the year, going into the fourth quarter. I am not basing that on macro or fundamental expectations. I'm basing it on flow of news out of the company. And I think that if they can continue a cadence of good news and good news reports, and I think the latest news reports out of Frontier as well as the DOW are being discounted by the market, and probably rightfully so, because EOSC has a credibility problem, quite frankly. So we remain long wheat, and wheat today did hit a new intraday. I think it was a new. Nope. We're very close to taking out a 52-week high at 25.60. We closed at 24.92. So we are long wheat. We remain short. I remain short Bitcoin, but those options are all the way out to September. My wheat options are all the way out to December. I think that this could present, if I look at DRAM, if we come down here, which in my mind is the initial breakout level, where things start getting out of hand, it would be a complete retracement, and that's below the $50 level. I don't think that story is done yet by any stretch of the imagination, memory stocks. But I do think a lot's going to depend on the hyperscalers and neo cloud earnings next week. On days like this, what I tend to do is I just turn off my screen and I go touch grass and do something else. Today, any of the stocks that you own, whether it's EOSC or it doesn't matter. There's selling going on. Yes, there's some safe haven buying rotation, but you'd have to believe that the AI story and then vis-a-vis the microchip story is done in order to or to arrive at a conclusion that this is the start of a much bigger downturn. I don't think so. I am disappointed we did not get the strength in the first 2.5 weeks of July like we typically do. And now we're entering a tougher period of the market. I still believe Bitcoin has one final push down to the 55,000, 50,000 level before October. A lot remains to be seen just because there are many moving parts, one of them being the Clarity Act and whether or not to be able to get that passed. For example, today, PCT being down $1 on no news. And I think that was after they announced news yesterday. One day does not make a trend does not make a market. So what I am doing is just patiently waiting, sitting on my hands and waiting for the opportune time to deploy capital. So hopefully you all are doing well. You're not becoming overwhelmed with the red on your screen. Tomorrow will probably be all green. And I will see all of you in the boardroom.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping. Just saying, I'm definitely